Hey traders, Raghee here. Let's get a quick audio and video. I think we're good to go. All right, welcome to another episode of Charts and Coffee on this what looks to be pretty bearish Tuesday. I don't know about you guys, but this is how a dip buyer, which is what I've been for my entire career, feels when they look at the S&P doing what it's doing this morning. It is time to go shopping. If you were in the futures room or the Sector Secrets Mastery last week and yelling Donkey Kong the market, what did I do? I went shopping. So I look at something like this as a terrific opportunity to start rebuilding my book of trades. Last Wednesday, and I'm talking specifically about this candle right there, May 4, was it Tuesday or Wednesday? Whatever that was, yelling, you know the day that was. See, you don't even need to know the days of the week to be a good trader. I won't kid you. I've been losing track of the days of the week since I've been a home-based trader for multiple decades. I don't know what that is. Anyway, when we see these opportunities where healthy trends are correcting, I'm not really crazy about the broader averages, but I'll tell you what, and I just want to make sure that I make this really clear. Days like today are opportunities. They don't feel that way because while everybody says buy the dip, and they do that with some sort of bravado, when it comes right down to it, it's not an easy thing to do. It's something you need to train yourself to do because I'm not a contrarian trader. I think that's just really markedly stupid. What you want to do is take advantage of contrarian moments, right? Know the difference between I'm going to short a brand new high in a market. I'm going to short a strong stock. That's not really how you want to be conducting yourself as a trader. But on those days, this is a blue light special, gang. This is the market going on sale. Not everywhere, right? Not everywhere. But there is that psychology. So for me, I love days like today, and I hope you guys do a little shopping. Go take a look at names you've been wanting to buy and say, look, I can't buy them at new highs, but on this pullback, where do we have the relative outperformance? I hope you guys take that to heart. And I think you're going to find that days like today, probabilistically, is every pullback going to be like it was when Yellen sent the market lower? No, not every pullback is going to be like that, but many will. All right. So train yourself to not be like the sheeple. Today is not markets in turmoil special, gang. Today's a blue light special. All right. So Eric, Benjamin, I love the question. So the question is right away, is there a pullback buying opportunity available to us? In AMAT, I would say no, because this goes back to relative outperformance, right? So this is where, part of the process that I will use, and I've taught this, we've done this in free videos, we've done this in Charts and Coffee. The process is really transparent. It's really not difficult. It's just, I was watching the Belichick-Saban documentary on HBO. I like to keep something running in the office sometimes. And I love the both of them just hollering at their athletes, do your job. My job is to find relative outperformers, double green, in a bargain environment. I won't say this meets the first two criteria, Eric, but what we will say as part of that job is to step back and ask, where are the opportunities in this blue light special? Am I dating myself? Maybe I am a little bit. You guys remember in the center of Kmart, that little blue light that would be spinning? That's what I'm referring to. Something is on sale. Now it's our job to find out where there's value, where there's good structure that is on sale. We don't want to do it without a huge amount of discernment, but their opportunities are going to be out there. So is the sky falling? I sure hope so. I sure hope most people think that. That's where we're going to find the opportunity. But, please remember, and let's step back for a moment. This is today's candle. That's the year. Have we seen opportunities like this? Have we seen pullbacks? Please do not program yourself into thinking the market should only make little shallow pullbacks in the context of a trend. This is a fantastic opportunity. Again, generally speaking, does it mean it's going to stop at the wave? No, There's no guarantee of that. Does it mean that there's a general trajectory of the market moving higher? Yes, right? That's the difference. No one knows where the pullback is going to stop. We have some high probability reaction levels that we're looking for, whether they be moving averages, Darvis, volume, Fibonacci, whatever your process is, should give you these downside support levels. And then each name is going to have a slightly different zone for that. But again, please take the overall year into context. This is where momentum traders who like to buy higher highs get crushed, right? And so their selling is going to create a little bit more of a panic. And remember, momentum traders are probably 80% of the market. Dip buyers, believe it or not, are pretty rare. So I guess it depends on your perspective and your fill. Yeah, exactly. James, it's flash sale time. It's Amazon Prime Day. However you want to look at it, is there going to be, so here's another thing I need to bring up. Is every dip just a retracement? And the question I get a lot is, Rog, what's the difference between a retracement and a reversal? We don't know that while it's happening, right? Newsflash, right? Nobody knows which one of the pullbacks is going to be the market that takes us into distribution, and then distribution takes us into a downtrend. Please remember that uptrends, unless it's a V bottom created by a central bank, and that's the only time we'll see V bottoms or V tops created by central bank sudden shifts in policy. Powell's done it to us twice. So unless it's a central bank driven sudden shift in monetary policy, what you will see is that broken up trends turn into distribution. This is classic Dow Theory 101. Uptrends are broken, they become distribution. Distributions, when they start to punch down to lower lows and lower highs, will then organize into a downtrend. So it is a process. So unless we see some massive shift in policy, assume that if this does continue to move lower, like it did in January and like it did in February, it's going to be distribution. What did both of those distribution markets create? Choppy markets that created oversold buying opportunities, not longer term shorting opportunities. Okay. So I hope that I'm making that really clear. I'm hopefully being a little even salty about it. And the reason is I don't want to mince my words, gang. Yes, at some point we will see the trend broken and the downtrend resume, but do not assume that. Do not fear that, because some of the best opportunities are going to be pullbacks. Some of those best opportunities within the context of an overall bullish market. Now, am I talking about the NASDAQ or the Russell? My gosh, steer away from those two. Russell for sure, right? Russell for sure. Small caps had their time in 2020. They're a dumpster fire in 2021. And that's the other thing to remind yourself of as well. This is not the 2020 playbook, gang, right? This is where I always remember the rather harsh but very true words of one of my mentors. Exactly what he told me. Kiddo, don't confuse an uptrend with brains. And that is something that a lot of us have to shake off early in our career. Go, wow, we're brilliant traders in 2020. Yeah, not so much. That's a hard thing to swallow. So I think that if you keep the opportunities in mind within the context of relative outperformance, you will be on the right side of the market more often than not, right? Okay, next up is our points of control and volume profile free indicators. Yeah, a lot of platforms have those as free indicators, my friend. Just look up the tools. There's different, the one that I'm using on TradingView right now is a simple volume profile tool with a point of control built into it. And it is free. Yes, yes. Now, what I'm always adamant about is if you're going to use a volume tool, volume weighted average price, volume profile, including my creation of the V-score, you've got to have it anchored. I don't want a rolling tool, right? I want to be able to anchor it to a time or a date. Okay, so can we take a look at TLT? Sure. So we'll start off with a look at ZB. You guys know I've been talking a lot about the 1, 2, 3, and I want to see the market stay above 158. I will tell you, of a lot of the positions on my book right now, this is one that's been sort of spinning its wheels in an allowable zone. You can see the cluster of different look backs on the point of control, nice volume ledge. It just hasn't moved higher. And we know there's a lot of chatter about what the bond futures are telling us, or bond traders are telling us about what they are projecting about what the future, maybe sooner rather than later, actions of the Federal Reserve are going to have to be. What are the bond traders saying? Federal Reserve, you are completely screwing up the monetary policy and the inflation call in your current comments and in your current statements, whether they be FOMC comments that are scheduled throughout the week, whether they be the FOMC statement and the current monetary policy. The bond traders are just saying you're wrong. Bond traders can be wrong longer than the Federal Reserve can be delusional. It's just that simple. So what's going to happen is years from now, months from now, quarters from now, whatever it may be, someone's going to say, oh, the bond market was so right about this back in Q whatever of 2021. The truth of the matter is we might still be punching up to higher highs in equities. The bond to equities to monetary policy shift is on a tight window. It can be wrong for a lot longer than the equity markets will actually show. So be careful with that. Be careful with that. I think the bonds are probably still poised for a quick spike up. I'm not expecting an uptrend. But what we were talking about with bonds is let the 1, 2, 3 form and trigger that bottoming pattern, then it will unleash gold. You guys remember the knock-on effect that I've been talking about in the free videos and here in Charts and Coffee. The knock-on effect is let that Dow 1, 2, 3 break out through that 158, 159 area, and it sort of unleashes gold. So neither one of these are the reflation trades that I've been keeping a really close eye on. None of these are really the bulk of what's been working very well in 2021. That's been copper, that's been crude, that's been grains like beans and corn. That's been commodity currencies, right? Like Canadian dollar. So there are other parts of the market that are far, far, far more interesting. And quite frankly, copper's been beating the pants off of gold. So, think about reflation. Is the bond, gold, silver narrative an interesting trio that now has some potential upside because of the bond market completing the 1, 2, 3? Yes, but it's nowhere near where I want to be, putting my time and efforts. Where are my time and efforts? In the sector secrets, we're long Canada. We're long Canadian dollar in the futures room. That gives you EWA, FXC, and the 6C. We're looking to, get the Australian trio, whether that be 6A, FXA, or EWA, right on that path. So, what else have we been focusing on? There's a lot of really interesting places to look. Gang, we got long not only the euro, but we got long a segment of Europe, right? So, sometimes you got to look in slightly unusual places, but it's definitely something that you can do. And whether you want to look at so I see a lot of questions about sector research. Sure, a few questions like this. So I'll use 2 free services. Okay, gang, free services. Either go to sector SPDR. I'll be spending some time there. I prefer sector SPDR when I'm looking for intraday individual components in relatively outperforming or underperforming sectors. This sector overview within sector SPDR is really great for that. So that's terrific. When I'm looking for rotation, why did I get us into financials? Why did I get us into energies? Why did I back off tech? Well, first of all, I backed off tech after cloud computing said, you're wrong. So sometimes, it's getting stopped out. That's the blatant cue. When I get stopped out of something, I will rarely go back into it. I will look elsewhere, right? So when I look at sector rotation, and I like this Ferris wheel analogy of what's at the top of the Ferris wheel, what's at the bottom. I'll do that usually over at. I love this site. It's another free site called Koifin. If you don't have a free Koifin account, do that some point today, especially if you're managing a portfolio, if you're looking at longer term setups, if you're wanting to understand sector rotation. This is something that I've been recommending to traders. Between sector SPDR and Koifin, you've got within 2 free amazing tools exactly what you need to be able to manage understanding these types of rotations that I teach. Okay, gang, let's see. What else do we have here? Let me get down the list of questions. So yeah, a lot of you, Jack is asking, good morning. I opened positions yesterday towards a close. Yeah, so one of the things, Jack, that I did not do with yesterday's weakness is I did not buy because we just had not pulled back enough. So I sent out a couple names that I want to have on the radar. So that's what I like to do, set up names that are on the radar, on our watch list. And then I want to see the markets close the distance to levels, again, very Yellen-esque to last week. And then I'll get to work. So between today and tomorrow, I'll be definitely getting to work. And remember that we have quite a few FOMC speakers this week. None of them are Powell. None of them are Yellen. At least they're not going to be scheduled events. But we could see a little bit more FOMC chatter help us out on these pullbacks quite a bit. So I did not look for buys yesterday, but I started building the watch lists. And then today, I'll get back to those specific names, get back to where it is that I'm looking for opportunity, and look at what they're doing, how they're responding in this environment. Not everything's going to be pulling back into the wave. Not everything's going to be pulling back in a big way. Those of you in Sector Secrets, I know some of you grabbed some utilities that was on the radar, and I'm so proud. I was in the room yesterday, and a lot of you were saying, hey, I'm long utilities. Love it. Not tech, right? Not consumer discretionary. What did we do? We focused on utilities, and we actually bought staples. Why? Because when people are looking to take advantage of this kind of rotation, right? We're seeing perhaps more of the broader markets moving lower. But remember, it's like water, right? Be water, my friend, like that old Bruce Lee interview. Some of you might have seen that. It ended up being a really popular commercial for. Who was it a popular commercial for? I can't remember. But that little soundbite of be water. Remember, what does water do? It usually doesn't like to stop. It likes to keep flowing. Think of capital that way. My father was an electrical engineer. Think of electricity. You can't let it stop. Bad things happen, right? So I remember my dad's old electrical engineering diagrams. It's got to keep flowing. Money, they call it currency. I love that analogy. Currency, and then also electrical currency. Think about money, the flow. If it's not going in one place, it's going to have to be siphoned off somewhere else. So think of it that way. Money doesn't go under the mattress. So if you're really thinking the markets might roll over for crying out loud, please don't short strong names. Ask yourself instead, what are the defensive names that I'm not getting into? Right? That's where utilities and staples start to make a lot of sense. So rather than picking a top, which I don't want to do anyways, because I don't hate my money, what am I going to do instead? Where is that flow? That's kind of a sector rotation conversation, isn't it? Where's that flow going to go? So we get long staples. We have a large crew in the room that's long utilities. That's what we want to focus on, right? Being defensive more so than just stepping in and picking a top in tech or something like that. I hope that makes sense. Flow, yeah, be water, my friend. Flow, water can, can fill a cup, or it can, I love that little clip. It's a really, really good, think of that. Think about that. It's gonna flow like water likes to in the path of least resistance. That's what we want to focus on. I hope that makes sense. All right. So with that being said, let's see. Let me grab another question here. Yeah, Koyfin, Koyfin. 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 All right. What's my thesis on FANG stocks? It's pretty simple. Thanks, but no thanks. And let me show you when and why. When did we lose clarity on FANG? May 4. May 4, gang. We lost clarity on May 4. So, and that's not just broader than NASDAQ or the QQQ. Let's dive into XLK. Let's dive into XLY. XLC was the only corner of tech that actually kept its double green. There's a quick relative performance scan for you right there. So in terms of a trade that we took on the Yellen pullback, XLK, nope. QQQ, please. XLY, looked at it. XLC, that was the winner. All right. And that literally was a winner by the pullback. First profit target hit, sitting at a break-even stop. Okay. All right, gang. I'm going to go run on over into the futures room. So if you're in the futures room with me, I'll see you guys there in about 15 seconds. If you're in the options room, I'll see you guys at 2 o'clock. 2 o'clock? 1 or 2 o'clock. I got to check. I'll be in the futures room with you all, I think at 2. 1 or 2 today. And then in the Sector Secrets, gang, heads up because we're going shopping. Be good to each other, gang. I'll see you tomorrow.